Welcome back to Teaching Thursday. This is the Stock Doc, and on this episode, we're going to talk about some differences between trading and investing, and why you should put some respect on these three things.
All three of y'all, stop playing with my name.
The first is going to be taxes. When it comes to trading and when it comes to investing, your taxes are going to be handled totally differently, particularly if you're in investments that are holding longer than a year. So when you're trading, your taxes, anything that you gain, that you bought and sold in less than a year, you have to pay regular taxes on. So it's just like if you're money from your job. Now, if you're investing for the long term and you own something for longer than a year before you sold it, then you are subject to the capital gains tax, and it's actually a lower tax bracket. So not a lower tax bracket, but it could bring you down into a lower tax bracket depending upon your activity and your gains. So of course you're going to have to put some respect on taxes.
And I ain't gonna say no more.
Now next you're going to have to put some respect on time.
Put some respect on it.
And this is because as a trader, you definitely have to be focused. You might only be trading for a few hours, but you have to be focused on everything that's going on. When it comes to investing, yes, you have to do your research on whatever it is that you're buying to make some money from. However, you don't have to necessarily be in the market every day or every second, every minute, every hour, such as if you were trading, simply because you are in it for the long term and you can kind of, monitor it a little bit less frequently than if you were trading.
Aha.
And lastly, you're going to put some respect on the turbulence in the market.
Put some respect on my name.
And by turbulence, I mean volatility. And so we all know, check out my video on volatility, how that is the difference between the ups and downs in the market. And it's measured by something which I have another video on called beta. And so essentially, if you are a trader, you are very subject to all the volatility in the market, and that's what they like. That's how it increases the chance of profits that they have. However, if you're investing, since you're buying and holding over time, it doesn't really matter what happens in the middle. So if you bought something and you own it for 5 years, what happened at the 3-year mark isn't as important. You just want to see that gradual increase over time. So these are some of the key differences between trading and investing. So I want to make sure you put some respect on those taxes, because it could get costly when trading. Put some respect on time. Definitely know you might have to put in a little bit of extra effort to trade. And lastly, you're going to put some respect on turbulence or the volatility in the market, because as a trader, you are subject to more of the fluctuations that go on every day.
All three of y'all, put some respect on it.
To see more videos like this, definitely subscribe to our YouTube channel. Comment below, let me know how this video was, and you can join our academy absolutely for free at www.thebmex.com/invest. Make sure to try out and check out our newsletter as well, Broadcast in the Black.